let's just say Mark is a CSR, transfers you to me, right? On an inbound. So first things first is I'm going to, because this is my first impression to you, right? So I'm going to thank the CSR. I'm going to say, hey, Mark, thank you. I got it from here. Hey, Fred, thanks for holding. The reason why Mark is transferring you to me is because I'm licensed and authorized to provide you with the information you need and answer any questions. But before I go any further, let me just make sure I can even complete the call. I'm going to ask you a few basic questions to confirm that I can help you. And if I can, I'm going to show you exactly how I can help you. But if I cannot, I'm going to save you a ton of time, and I may even be able to point you in the right direction where you should be focusing your time. So the property that we're talking about here in Scottsdale, this is where you live, right?
Right.
Great. Now, with regards to the mortgage, is the intent to maximize your cash flow, meaning save money on your monthly mortgage, or is it to pay this house off by a certain date? What would you say?
Maximize the savings.
Got it. And then with regards to the savings, where would you redirect that? Would you put it towards debt, savings, retirement, investments?
Yeah.
Got it. And then with regards to the debt, I imagine it's probably credit card debt. How much total in credit card debt do you owe?
$20,000.
And then what are the monthly payments you send, rough estimate for that $20,000?
I just pretty much just pay the bare minimum.
Oh, I see. So are you noticing that the balances are staying the same? Do they sometimes go up? Or are you noticing you're chipping away to where they're going down slowly?
They're just going down very slow.
Got it. So usually the reason why most homeowners choose to make the minimum payments is because of what's called a net. Their net is very minimal. And so what I'm going to do is help you figure out what your net is. So net is basically how it sounds. It's the net of your net income. So we're going to use November, for example. You bring home your net, which is deposited into your account. And then after all your bills are paid, not only your mortgage or credit cards, I'm talking about everything from hobbies to dining out, taking the family out, ordering DoorDash or dinner. After everything in November was paid, how much of your net income for that month in November were you able to hold on to going to December?
Like $300. I'm just trying to get a rate.
Yeah, for sure. That's exactly what I'm doing for you. Watch, I'll actually show you. The reason why I have to ask these questions is because we operate a little bit different. At the end of the day, we all go to the same place. It's Fannie Mae, Freddie Mac, VA, and FHA. My company just happens to be so large that our relationship or affiliation with these entities are super strong. So I'm going to make sure that if it can be done, I'm going to show you what it is. So watch, this is what I mean. So with the $300 that you net, right, that is technically your net. And you put it to savings, I'd imagine, or you keep it in the bank. How much do you currently have right now in checking and savings do you average per month?
I got about $1,000 in checking savings.
Got it. So if you're adding $300 to it every month and you only have $1,000, really that $300 you add, you just use anyway. Does that sound right?
Right.
Okay. So here's the goal is how do we create enough savings to the point where you got more than 6 months to 12 months of living in your account for a rainy day? Who knows? God forbid the car breaks down or AC goes out. You want to make sure you got more than $1,000. So right now, it sounds like whatever comes in goes out. So there's really nothing left for you. So I think I can move forward with our call, but let me just confirm a few things first. In terms of the credit cards, I'm sure that probably has weighed on your credit score. When was the last time you looked at your credit report, Fred?
It's been a while.
I'm going to tell you what the comments are with these credit cards because then you'll know exactly how to improve your FICO score. And having the best FICO score as a homeowner is the best thing that you could do for yourself. But here, watch, I'll show you. Going into income, does that make sense? So now you see me going into the 1003. But what I want you to understand is the first 1 to 2 minutes that I spent with you on the phone, I have now so much leverage. I know that you got 20 grand in debt. I know that you pay the minimum, and I know you're check to check. I know you only have $1,000 in your bank. So during the conversation, if you hit me up and say, hey, I just want to know if you have the lowest rate, or hey, I don't want to pull my credit. Now I have so much leverage on you that I can use it. You said, hey, you know what? I don't got time for this call. I just want to make sure, can you get the lowest rate? Yeah, absolutely. I appreciate your time. And the whole entire goal of me even going through these questions to make sure that I can continue the phone call. The bottom line is this, is that in the little time that I showed you, Fred, I understand, 1, you're making the minimum payments on 20 grand of debt. 2, the 20 grand of debt is also weighing on your FICO. 3 is that right now you're check to check and you have less than 1 mortgage payment in your bank account at any given point. So my goal is to apply it to you. I can give you a low rate and estimate, but so can the internet or the radio or even the TV. What I'm trying to figure out is, why does it help you? How can I help you? And how can I then ask my management for the exception to get you the absolute best deal?